The attractiveness of the market is there. The case for investing in Asia is very obvious.
If you look at the Indian opportunity in 3-year snapshots, you will say, oh, that's a change in the right direction.
Where else are you going to get these companies that are growing at such massive rates of growth? And it's not just growth coming from the population and the consumption. It's also the economies are changing, families are having succession issues, multinational corporations are looking at hiving off businesses. So there's a lot of deal flow being generated in these markets.
India seems very overvalued compared to China. It partly looks overvalued compared to public markets if you look at averages. But in the end, if you select your companies carefully, I think you can find great value even in India.
So if you look at India as a GDP growth, it's at 7% now, and private sector grows much faster and the early stage companies grow even faster. Today we are at the cusp of Indian consumption story growing and then e-commerce, the companies are growing at 50% quarter on quarter.
So a lot of the Indian infrastructure is being built by local Indian sponsors who are focused on the next $1 trillion build out. And that's where they have their returns embedded. However, they do not have the capital to actually work on the next $1 trillion unless they monetize some of their existing operating assets.
The India growth story is the story of consumption, is an internal consumption. So all these sectors which are related to the consumption will do well because the India's growth will be driven by the internal consumptions in the future. When I say that, I think the sectors like media, education, healthcare are the sectors which look very interesting and promising in today's market.
If you look at the 10 biggest Chinese exits, the surprising fact is that the smallest of the 10 biggest is actually bigger than the smallest of the US exits. So there's been the median exit from China has been larger than the median exit from the US. So exits from China have not really been a problem in the last few years. Will that continue? We don't know. But in the past, you could see that China actually offered very attractive exit possibilities.
For obvious reasons, obviously, I think the growth, has been strong, and I believe it's going to be, continuously strong in the next, 3-5 years at least, and perhaps longer. Also, China has a size, right? Has a size to accommodate, many investors and, for, large deals.
Going back 10 years ago, probably a handful or, maybe a dozen institutionally backable managers in China. But if you look today, you've got more in the region of 40 or 50 plus.
There's questions around corruption, there's questions around regulation in the market, and the uncertainty thereof around tax rules and so on. My perspective on that is there's a lot more noise rather than reality in some of this. And also in the long term, this is and will be an attractive market.
There's a tendency for a herd mentality where everybody wants to get into a market all at the same time. And then when things superficially look difficult, everybody wants to get out or doesn't want to get in anymore. The fact of the matter is there are times when things don't look good from a news perspective, and those are the very best times to invest. And there are times when things look too good to be true, and that means they probably are.
There's a fundamental difference from investing versus speculating. And that's what you have to really understand as a private equity firm. As a private equity firm, your job is to invest in those people, not speculate, not try to jump on a bandwagon and see a 3-4 year get out at the top and leave the poor entrepreneur and promoter there to pick up the pieces once you've left.
Ensuring that you have a really local presence, local team, the local connections, that this is really long-term about building relationships, and that if you don't have that, it's very, very difficult to be successful.
I think there's been a fair amount of investing which happened at fairly high prices between 2006, 2007. And I think that's the principal cause of indigestion in the market. I think that capital has got to play out. And I think it'll take maybe the better part of a year or two before the market settles down.
I think for the LPs, I would think the challenge is to, identify a local team that you can trust, also, that have an edge. There's, as you point out, there are too many local GPs right now. It's very hard to differentiate one from the others. from the GPs. I think the challenge, again, is just, it's a very competitive market today. There's too much cash chasing too few deals.
The great thing, of course, is that we have a very vibrant diaspora here from that part of the world, and I think that they are also key to our progress. But we have historical links, and we have worked with these countries over many, many years, even before they were the emerging economies.
It's very simple. Britain and India have a lot of things in common. They can work together, they can do business together. And as I just said, that India is an emerging market, there are better returns there, and therefore it is in the interest of the UK investors to do business in India.
No, I think it's very important at events like this that LPs and GPs come together and really share and understand what's going on in the marketplaces.
Well, just as with investments, it's all about efficiency, so it is when you're running your business. And the most efficient thing about conferences like this is I get to speak to LPs, find out what they're looking for, making sure that we can meet as many of them as quickly as possible, develop some relationships, but also, more importantly, the LPs can see from the GPs what's out there, get an insight, and they themselves get a flavor of how they might want to deploy their capital. They get to see a lot of GPs very quickly.
This is a very concentrated sort of effort at not only getting a large number of LPs and GPs together, but also setting a context which is friendly and investment related. So it's well done.